A lot of you know I've been studying taxes. I'm on the unit now in my course where state taxes are taught. So I'm done with the federal. Now it's time to deal with the language, the writing, the whatever of the California state, because obviously every state tax is different. So let me show you something I spent 2 days on because I just couldn't wrap my head around it. It makes kind of sense now that I get it, but still, I think this needs to be rewritten. So this was the problem set that got me so confused. 2023 tax year. You have someone who's 16, so a minor, unmarried, of course, a dependent. You guys don't have to worry about what a dependent is, but basically a dependent has special rules applied. And then gross income, $1,500, probably just a 16-year-old with a summer job or part-time job. AGI, $1,500. You don't have to worry about what AGI means. A stands for adjusted. So there's certain things you can do to reduce the amount of money that is taxable. For example, saving for retirement, et cetera, et cetera. By the way, this is not financial, accounting, legal, tax advice, whatever. Just me ranting. And then if you break down how he made that $1,500, $1,300 is in wages, and then $200 is interest. Question posed to me, does this person have to file California state taxes? California state requires you to file taxes if your income is more than your standard deduction. For a person that's a dependent, you have to calculate what their standard deduction is, both on the federal level and on the state level. Now, with state taxes, most states, they follow a lot of what the federal does, and then they just adjust the numbers. So to me, it seemed pretty simple, right? I just have to figure out, okay, well, how much of the income counts, and then what their California state standard deduction is. California uses the 540. They have a little worksheet here, California standard deduction worksheet for dependents. So this is what you use to calculate for your dependent. Here, enter your earned income from line 2 of the standard deduction worksheet for dependents in the instructions for federal form 1040. So you have to go to the 1040 right here, instructions, and then you have to calculate. So basically, again, like what I said earlier, they follow certain things of the federal, right? They base it on your existing federal return. So we go here, okay, we go to the calculations. So basically what line 1 is looking for is there's special things you get if you're blind or you're a senior, which our 16-year-old doesn't have. Is your earned income more than $850? So this is where you would look at the criteria and potentially add a little bit. So again, earned income, right? It didn't say gross income. It didn't say adjusted gross income. It said earned income. So you have to go here to look at what earned income is. Earned income includes wages, salaries, tips, professional fees, and other compensation received for personal services. So basically, in a word, earned income is the wages he had. It doesn't include that interest, that $200. So $1,300 of wages. Is that more than $850? Yes, it's more than $850. So you have to add $400 to it. And if it wasn't $850, then you enter this. Basically, this is the minimum standard deduction. You'll see this later too when the state also lists this number. We add $400 to $1,300, and then we enter that here. So that'll be $1,700. So here, this is an amount set by the IRS every year based on inflation. So since he's single, you put $13,850 here. And then here you enter the smaller of line 2 or 3. So 1,300 plus 400 versus 13,850. So this is smaller, so you enter that here. There's some other criteria here. Basically, you get something extra if you had anything checked here, but it doesn't apply to our minor. So far the federal form, right? The federal IRS form seems pretty easy to remember. Right, we got this number here, 1,700, based on these wages that we had plus 400. So that seems pretty intuitive. So now we move back to the 540, the state of California form. And this is when it just confounded me. And then I had to email the course. And then they couldn't really explain it to me well. And then I had to, anyways, I'm getting ahead of myself. Let's watch. Enter your earned income from line 2 of the standard deduction worksheet for dependents. So enter your earned income from line 2. Let's go back here, okay? So we already know his earned income is $1,300, right, from the wages. So are they asking the earned income plus 400? Or are they asking the earned income from line 2? You see how this could be interpreted? I interpret it as earned income, not the result of line 2, which it turns out that's what it's asking. It's asking for the result of line 2, 1,300 plus the 400. It's asking for that, not your earned income. 1,300 plus 400, that's not your earned income. That's just the number that the IRS uses for the calculation of the standard deduction. This phrasing is incorrect. They should say something like the result or the final number from line 2 or the number from line 2. They shouldn't put that word earned income in there because we're adding a 400, or this year for 2024, it's a 450. We're adding a number to our earned income for a calculation for the standard deduction, but that's not actually a definition of our earned income. So that's where my confusion is. And I'll show you in a spreadsheet I created why this caused me to get the problem wrong and I couldn't figure it out. So let's go to my spreadsheet. So those of you who saw that IRS form earlier, this is just me putting it into my language. But basically what we just explored with the IRS form, it's done here. Now this was for 2024 this year. My practice problem was for 2023. All we need to remember is we had a number this, and then we also had an earned income, right? Notice how I separated them. We obviously know now what it's asking for is the result, right? It's asking for the result of line 2, not for the earned income, but what calculations you made to get that final number. Initially, I didn't understand that. So I was like, oh, it's asking for the earned income? Oh, that's easy. Well, that means the earned income is this, right? By doing all those calculations, again, don't worry about following along all of this. Basically, all you have to know is the final result. This is the standard deduction for California for this dependent, $1,300. Now, how much money did he make? $1,500, right? So if he made more money than what his standard deduction is, then he has to file taxes. But problem set, the answer said he didn't have to file taxes. So I was so confused. I was like, what? And I was emailing the course and everything. And then they just couldn't explain this to me until finally I figured out myself. What this line is asking for is not your earned income, but this result right here, this line 2. So they could have just easily said line 2, the result of line 2, or the number on line 2, instead of confused us with earned income, which we already have a definition of. So now when we get the number right, notice the calculations here. By the way, this is the minimum standard deduction that I told you about. It follows the IRS. Now, see, the standard deduction is $1,700 for this dependent. Now that is bigger than his actual gross income in AGI. So this fulfills the criteria. He doesn't have to file taxes if he doesn't want to. Now, applying that here, by the way, this shows how much inflation messes us up. So this is for 2024, so tax year here. So if you also just made that much money, earned income-wise, because of inflation, certain numbers are changed. For example, his standard deduction, right, based on inflation. So his standard deduction, max standard deduction is also increased. His minimum standard deductions increased a little too. Either way, he doesn't have to file taxes this year either. If he made $1,500, he's just considered much poorer now. You see, the more I study this stuff, the more I realize you basically have to pay for tax software. Now, the state of California has certain free things, just like the IRS has certain free things, right? But for people with tax returns that are a little more complicated, some of these free things that are offered you can't use. It's just unfair. For people with complicated lives, people with dreams, people with businesses, people who want to read a little, or people who overthink, it seems like the tax code is meant for you to make a mistake. What do you guys think? Am I the only one that's obtuse right here? Or did you guys see what I was getting at and why I could be confused for 2 days about what it's trying to ask for? Crazy, guys, crazy. I'll keep sharing with you guys what I learn, funny things, frustrating things, etc. But either way, I encourage all of you guys to learn, man. Keep learning, people. Your brain needs it. All right, guys, talk to you soon.